In this episode, we discuss what it means for you if you're dreaming of that sunny getaway in Palm Springs or a mountain retreat in British Columbia, or perhaps you're just looking to invest in rental properties across the border. Hi, my name is Joanne, financial planner and co-founder of Isle Wealth of Raymond James. Owning real estate in both Canada and the US can be a great opportunity. But as with everything cross-border, it comes with its own set of rules, taxes, and a few unexpected hurdles. So let's break it down. Buying property in another country isn't quite as simple as picking out a nice house and signing some papers. You'll need to navigate different legal systems. Canada and the US handle real estate transactions very differently. Property taxes. These can vary significantly between provinces, states, and even cities. Mortgage financing. Spoiler alert, getting a mortgage across the border isn't as easy as one might think. For example, US mortgage terms often have different rates and structures than in Canada. And if you're financing a property across the border, be prepared for larger down payments and stricter lending requirements, because banks love making things just a little bit more difficult. If you're renting out your cross-border property, get ready to deal with two tax systems. In Canada, rental income is taxed as part of your overall income, but you can deduct expenses like mortgage interest and property maintenance. In the US, rental income is also taxed as regular income, but here's a twist. You can claim property depreciation as a deduction, which can lower your taxable income. One of the few tax breaks the IRS actually gives us. Now, let's talk about selling your property, because at some point you may decide to cash out of that vacation home. In Canada, 50% of your capital gain is taxable. In the US, capital gains are taxed at different rates depending on how long you've actually owned that property. The Canada-US tax treaty is designed to prevent double taxation, but you still need to file properly, otherwise the tax man is going to find you. Long story short, you need a strategy to minimize taxes when buying, renting, or selling cross-border real estate. Getting a mortgage in your home country is one thing, but getting one across the border, whole different ballgame. Canadians buying US property expect to put down 20 to 35% because US lenders consider you a foreign buyer. Translation, higher risk. Americans buying in Canada, similar hurdles. Your US credit history doesn't always translate, and you may face higher down payments. And let's not forget about exchange rates. Fluctuations between the Canadian dollar and US dollar can impact your property value and mortgage costs over time. Timing your currency exchanges wisely can save you thousands of dollars in the long run. Owning property in two countries? Great. Try passing it down to your kids without legal nightmares. Not so great. If you don't plan properly, your estate could end up going through probate in both Canada and the US, which means delays, months or even years. Legal fees, because lawyers absolutely do not work for free. And 3, unnecessary taxes, because governments definitely do not work for free. So to avoid this mess, consider setting up wills or trusts that are valid in both countries. A cross-border estate plan can make sure your assets transfer smoothly and tax efficiently to that next generation. So what are some tips for cross-border property investors? Plan your financing carefully. Let's consider mortgage options, down payments, and exchange rates. You need to structure your estate properly. A well-thought-out estate plan can save your heirs from unnecessary legal battles. And work with cross-border experts such as real estate agents, tax advisors, and financial planners who understand the rules on both sides. Owning real estate across borders can be a great investment, but without proper planning, it can also become a financial and legal maze. The key? Know the rules. Plan ahead and get expert advice. In the next episode, we're talking estate planning for cross-border families. Because if you thought property taxes were complicated, just wait until we discuss wills, trusts, and inheritance laws in two countries. Bye for now.